It's Sunday the 19th of May, so I'm recording this for trading starting tonight. Emini S&P, we've been more focused on the indices lately because they've been a bit more fun. We've been short all the way down here, and then we were long, so we really caught that move nicely. So, however, we bounced a little bit further, so the end of the week last week wasn't so easy for me. I figured we'd stop around 28.60, 28.70. We went further than expected, so my shorts were stopped. Then I was looking to sell it around the 2900 area, but we just didn't get close enough. 28.94. I don't know whether you sold it, but I didn't. So I was looking for a move up towards there on Friday, and we didn't get it. We got an inside day on Friday, which shows indecision. Bears still fighting back. I'm sticking with my medium-term negative outlook, so I do want to get short this again. And as I say, I haven't managed to. I got stopped when we jumped above 28.75. Now you see we've got a second trend line here, which has formed and held perfectly on Friday. So if you want to add that to your charts, you can put that in. It's from the high on the 2nd of May. So that trend line comes in at around the 28.85 area. If we break above it, and it is a very minor trend line, so I wouldn't rely too heavily on it. I wouldn't go full into a short position there. I'd save some bullets to see if we do get up to sort of 2900, even 2904. We're going to have to get up through, well up through 2905 or even 2910 to be stopped out of that trade, and then we'll push up to sort of 29.25.30. But as long as we hold below 29.00, I remain pretty bearish of this. We can still form that head and shoulders top, which I've been talking about all last week. Break below the neckline at 2800 is the confirmation of that completion of the head and shoulders, and that gives us our sell signal. More importantly, don't forget that big double top on the weekly chart for the Emini S&P, which I really do think is an important sell signal. Doesn't complete the confirmation until we break below the 2300 area, but I think that this is good enough for me to bet on the double top. I haven't looked at the dollar index for the last couple of days. I've been focused on the indices, but you can see the dollar has now recovered again. So it does seem to be, it is in this bull trend. The bull trend goes all the way back to, well, beginning of the year, January. So we are in a bull trend, and when we do dip, buyers do come in, but it's been increasingly difficult to get a really good level on this. However, bull's back in control. So it does look like we can retest the previous high at 98.33 in the dollar index and a push above there. Well, we seem to break higher and then have these big pullbacks, which I find very difficult. You know, we just about had a low 97.02. What's this low? 96.78. So we just about had a low above the previous low, but you keep getting these deep pullbacks. So it's a really difficult bull trend to trade. Certainly a difficult bull trend to hold on to a long position. Aussie dollar, I've suggested shorts for weeks now, so if you're still short, this is just working really, really well. We've hit the 78.6% fib at 68.61, which was my target and minor support for the day to take some profit on shorts. So if you've done that, you've had a great week. I would be selling into any bounce. I would suggest looking at the hourly chart for those levels. Let me try and get that up for you. So we've got a nice little trend line 100 moving average at around 69.05, 69.15. If we get anywhere just above 69.00, that looks like a good place to short on Monday. New Zealand dollar, we've been short for this move, easily tracking this trend line going back to the end of March. 200 hour moving average as well, holding perfectly. We were getting short up here. So this has worked really nicely, and we've continued lower on Friday. So we broke the previous low. If you're short, still short, that's great. Hold on to it. I think this will continue lower, just as I suggest the Aussie dollar will also continue lower. Yen sort of tracking the indices, so as soon as the indices recover, the yen weakens. But I would suggest that the bear trend will continue. As you know, I think the stocks will go lower. So watch for resistance around 110.25, 110.30. Just a little bit of fib resistance. It's only minor, but just having a look over my shoulder at the 4-hour chart, but that's not showing me an awful lot. There's no very clear levels until we get around 110.50, 110.60. Whether we get there, I don't know. Obviously, it'll depend on whether the indices recover further. Euro yen just trading sideways now, consolidating after a decent drop. We seem to be holding the 200-day moving average, a 200-hour moving average, which is around 123.00, and obviously is declining, which should help us push the pair lower. If we get up through there, we've got good resistance from the confluence of fibs around 123.15, 123.25, coupled with that trend line, which is about just over a month old. So that should be good resistance there. You should also have been short the pound recently. I've had you short certainly since we failed to break above that trend line and broke back down below the 100-day moving average and below the 200-day moving average was further negative confirmation. So if you've been short this pair, you've done really, really well last week. We've just tumbled. 127.11 is where we got to. The break below, the Feb low, that was the only area of very minor support. I certainly wasn't suggesting along there. I did say a break below 127.70 would be the next sell signal. So if you were holding shorts and waiting for the break below there, you've done well. It just looks like it's going to continue lower. So I do think the Aussie, the New Zealand and the pound will continue lower. And as you saw, the dollar index is recovering, which is certainly going to help that. Gold, however, has completely fooled me. Normally I like gold and I think I can read it quite well, but not in the last week. So the break above this resistance area here gave me I thought that was a buy signal. The fact that we've beaten the 100-day moving average. I didn't pay too much attention to this minor negative candle. I obviously should have done, because since then, over the last 3 days, we've just collapsed. So we're back down at the 500-day moving average. A little bit of support at the 61.8% fib at 1276. But really, it didn't have a huge effect back here at the end of April, so I'm not going to rely too much on that. We do have a bit of a trend line, which dates back to August 2018 here. So I don't think I'd be buying here. This is just too confusing for me. 1272 is around where the support is, a bit higher. 1273, 1272. So a break below 1270 should, in theory, be a sell signal, and it does look like. Certainly we are in a negative trend over the last 3 months. So a break below 1270 should see gold plunge. The stochastics look quite negative too. Silver chart has been negative, and we were selling it up around 1490, 1495. That worked quite well. It's technically done perfectly. We've just held the trend lines and Bollinger Bands and everything else and collapsed. So I don't know if you're running a short in silver, as I suggested. I wanted to buy above 1497, so that certainly didn't happen. So if you're running shorts, that's starting to work, and it does look like silver will collapse further as well. We've done well in oil too. The support around 60.90, 60.70 just worked perfectly every time it dipped down there, and if you were buying it, there was a really nice turn. As you can see, that's obvious. I did suggest we would get higher. I did suggest we'd get up perhaps near $64. We didn't get quite that high. We got a 63, 64, and this is a little negative candle now with the spike to a new recovery high, and then the lower close, bit of a red body. I think so that's done. I think oil could now return to this important support level around 60, 90, 60, 70. We've got the 200-day moving average just declining slightly to 60.60. So a break below there will be more negative, and we can come down to sort of 59.60 would be the target. A little bit of support there, not huge amounts, but I would suggest that would be a reasonable target. I've got a feeling we're going to break this support next time, but we'll just have to wait and see. I can't guarantee that. I'll finish off with the DAX. The DAX is incredibly confusing at the moment. It's not really respecting any levels. This enormous bounce back on at the end of the week last week was a surprise. That was all down to Trump and his tweets about car tariffs. I don't see any clear pattern on this. I don't really see any particularly clear levels either. So I'm going to have to leave it alone. I think the US indices are a little bit easier to read. But this is a bit of a mess and quite volatile and not really respecting levels. Even the 500-day moving average, that didn't hold anything on that big bounce back. Nasdaq, however, which also broke higher, which confused me a little bit. It is respecting the levels though. 61.8% fib at 76.50. Well, we just missed that by a few points on that bounce. We only missed it by we got to 76.41, and then on the dip we held this support really nicely around 75.15, 75.05. Little bounce back, not quite to the previous peak, and retesting that support again. I'm going to stick with a negative outlook for the Nasdaq. I think this is just a bounce back, And again, we could be forming a head and shoulders pattern here. So watch for the break below 72.90. Is this a right shoulder? It certainly could be, especially after Friday's decline. If you haven't got a position on now, well, it would certainly be worth trying to sell it around 76.40, 76.50 and see if that holds. If we go up a little bit higher, you can stop above 76.90, I would suggest. If you don't have a short, or if we don't happen to get up to that sell level, then really you might as well just sit back and wait and see if we break 72.90, because that would be a much clearer sell signal. On the short-term chart, we do have a little bit of support around 74.30, 74.20, and then if we get back below this trend line, which is around 73.90, then it'll look more negative. Dow Jones is not, the bulls anyway, have not capitalized on the break above this trend line. We plunged back below it. Here again, small double top, not really looking very positive. Doesn't really look like the bulls are in full control. The trend line here has held the bounce, so again, potential head and shoulders pattern on the Dow Jones. As you know, I've been talking about that all last week. This support broke down last time, so it might well break down if it's tested again. The 100 and 200-day moving averages are converging just below 25,450, so below 25,400 will be more negative again. But the break of the neckline at 25,200 will be a very clear medium-term sell signal. If we beat last week's high at 25,955, that's a 50% fib, by the way. That's a 50% recovery of this little plunge that we had in the early May. Then we definitely have resistance around, let's call it 26,100, 26,130. This midpoint of the Bollinger Band decreasing, so we'd have to get up through 26,180 for me to be bullish and consider that the neckline to the head, consider that the right shoulder of the head and shoulders is not going to form. So yeah, only above 26,180 would I think that. But for now, I'm looking for the head and shoulders to complete.